Good morning, folks. This is Naeem Aslam, Chief Market Analyst at AvaTrade. Please kindly do give me a check by saying yes or no if you guys can hear me. Wonderful. How is everyone today? Since we still got a few minutes left, so might as well just chat a little bit, so get to know each other a bit more. So how's everyone doing and where are you guys from? So just a little bit about myself. My name is Naeem Aslam. I'm the Chief Market Analyst at AvaTrade. I have worked in the finance industry over a decade. I worked as a hedge fund trader for Bank of New York Mellon, equity trader for Bank of America. I have ran the research desk at various different investment firms, and I am running the investment research department, the research department for AvaTrade. So that is me. Now I'm seeing that a lot of people are here, and then everyone has a very different answer. People coming from Zimbabwe to Jamaica to South Africa, France, UK, obviously Botswana, and Nigeria. Wow. So we have a very big and wide variety of people joining from pretty much everywhere. This is like a United Nations, really, if that is if we can say that. With people coming from London, my town, obviously. I'm based in London, and the lockdown continues over here, and the situation is pretty bad. I mean, I don't go out at all. I just stay in and trying to avoid staying out or to be any of the public places, honestly. And I strongly actually advise for you guys to stay home and keep it healthy and safe. That's the way to do it. Right. Okay. So shall we begin, folks? Now. Okay. So all right, folks, so just to let you know, the recording of the webinar will be available at the end of this webinar, right? So you can always go to YouTube channel for AvaTrade, and then you can really look at our previous recordings for our webinars and what we have covered in our previous webinars. So before we begin, please say yes or no. How many of you have attended any of my previous webinars? So you can say yes or no. Okay, so very few yes, and majority of them are no. So I believe that a large majority of people over here, they are, you know, it's they're new. And out of that, folks, how many of you have been trading different instruments for less than 6 months? Please say yes. Only those people who've been trading for less than 6 months. Okay. And now those people who've been trading more than a year, yes, from those people, please. You see, this sort of survey really helps me to figure out the level of complexity that I will be discussing. And then, because if you guys say that, look, you know, we've been trading for more than a year, then it makes it really easy for me to just go through or fly through some of the terms, because I would expect you guys to know. But when you guys say that, okay, you know, we've been trading for less than a year, then obviously you are newbies to this business, or you are still very early stages of learning. But if you say that yes, you've been trading for more than a year, then I would say that you know, I expect you guys to have a intermediate sort of a level with respect to trading, and then you guys would know the terms such as quantitative easing and you know, it's just the various different technical terms that we will use with respect to monetary policy, or of course with the stocks and so on and so forth. But anyways, let's begin, and welcome once again to AvaTrade's webinar. My name is Naeem Aslam. I'm the Chief Market Analyst at AvaTrade. I run the research department for AvaTrade. In this today's webinar, we will be discussing, this is the masterclass, and we will be discussing how to trade stocks. But before we continue, it is important for us to go through this slide of disclaimers and risk warnings. So folks, please understand that anything which will be discussed in this webinar cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors, because they would be more informed with your financial situations, and perhaps they'd be able to cater your financial and risk management much better than anyone else. So this particular webinar is purely for education purposes, right? So let's begin. But before we do that, it is important for you guys to understand where you can really find us and how you can really contact us, right? So I am very, very active on my Twitter account, and so is the AvaTrade's account is very active. We break all the important news with respect to global markets, financial markets. And the handles for you are right over here. This is my handle, and I will show you the Twitter account shortly as well. And this is AvaTrade's Twitter account handle. So let me bring them out just to show you guys that where to find them. If you guys do not have your Twitter accounts, or if you haven't signed up for Twitter accounts, I would highly recommend you guys to go and then definitely sign up on Twitter. The reason is because you really get those you know, quick beats from us in relation to markets, what to look at for, what are the economic numbers are coming out, and I think these numbers are these sort of details are very, very important from for traders to really understand that, and then be informed of that. So as you can see, you know, there is a lot of information on Twitter with respect to any of the breaking news and what is happening with the markets and so on and so forth. So I would highly, highly recommend you guys to jump on Twitter and then make sure that you know you follow us. So again, once again, the handle for AvaTrade is right over here, and then we are verified by Twitter as well, so which is always a plus. And again, the Twitter handle for myself is right over here, and feel free to follow us on that. And the second, let's go back to our presentation now. Here we go. Okay, so our YouTube channel, this is very, very important. On a daily basis, folks, I produce a number of videos. The two videos which are very important for traders is obviously your daily fundamental video. In this particular video, we cover everything which is really impacting the market on that particular day. And those are primarily your fundamentals, so your economic numbers and other fundamentals which are going to even influence the price action for that particular day. If you know these fundamentals, then obviously the chances of you enduring those pains from unknown variables would be a lot more less, because I mean, there's always something coming out of a blue in the market. So we need to prep ourselves. We need to know all the major fundamentals in order to understand them. So by following us on Twitter and by listening to our videos on YouTube, you will certainly be a lot more informed, and then you don't have to go to 1,000 different websites like CNBC, Bloomberg, Reuters, so on and so forth. Not that I'm saying that you don't have to, you should still continue to read them, but in this way, in this particular videos, we provide you all the information very concise in 5 to 7 minute video. We'll give you all that information. The second video, again, I'm going to show you the way to find find these videos is your technical analysis video. In this particular segment, what I do is I take one derivative and we perform a technical analysis. We look at from a weekly time frame perspective, and then we go into daily time frame. And then for those of you who are active traders, we also define those active and passive zones. So how to find these videos? Again, all what you gotta do is go to YouTube and then find us over there under avatrade.com. So this is our page, and this is our daily analysis. Here is your daily fundamental analysis video. This is your technical analysis video, and there's a huge list on a daily basis. As you can see, we are putting these videos out there for you guys, so it's quite interesting for you guys to understand that. And then especially, you can see that today crude oil price plunged more than 10%, and then we put that special analysis on that, so keep an eye on it. And then these particular videos, they are your coronavirus videos, the updates on them, and of course the important aspect, the influence of this coronavirus on the financial markets. So that is another bonus video that we do. So let's begin. What are we going to do today? In relation to our masterclass and in relation to how to trade stocks, our agenda for today is obviously, firstly, we need to know is measuring indices, right? So before we pick up any of the stocks, the first thing that we need to know is which of the index is a leading index and which of the index is a lagging index. So for example, if we are picking up a stock, right, and we need to know that stock, it belongs to an index which is it's a leading index. Why is that important? Because if a stock belongs to an index which is a leading index, it is highly likely for that stock to go up more than a stock which is is part of an index which is a lagging index. Like for example, lagging index is like, if right now if we compare the three major US indices such as the Dow Jones, the Nasdaq, and S&P, we all know that the Nasdaq index is leading because the drop hasn't been that much. And again, I will show you that briefly, that what do I mean by that. But when we look at the S&P 500 index, this is your second best index. But the Dow Jones index has certainly been your lagging index. So what do I mean by that? Let me show you on the chart. So what we got to do is we go to our MT4 platform. This platform can always, as always, it can be downloaded from our website, from AvaTrade.com, and you can see that. Right. Now, what do I mean by leading and lagging index? So this is your Dow Jones index. This is your weekly chart. How do I know this is a weekly chart? Because this particular button over here really tells me that this is your weekly chart. Now, on the weekly chart, I have three different moving averages. This is your 200-week moving average. This is your 100-week moving average. This is your 50-week moving average. So now, given the fact that the price came close to 200-week moving average, but it hasn't had any close above this moving average, it shows that yes, the momentum is back, but it is still lagging some of that momentum because we haven't seen the close above the 200-week moving average. Now let's compare this situation with the S&P 500. Again, we go to weekly time frame and then we put those three indices back. So this is your 200-week, some averages back, not indices. This is your 200-week moving average. This is your 50-week moving average. This is 100 moving average, and this is your 50-week moving average. As you can see from here clearly, that the price has not only crossed this 200-week moving average, but it is about to challenge its 50-week moving, 100-week moving average, right? And then when I change this to daily time frame, you will see that the price is also challenging its 50-day moving average. Day before yesterday, the price crossed above the 50-week moving, 50-day moving average. And as of yesterday or as of today, what we're seeing is we're seeing that weakness coming in. So meaning that we don't know whether that the price is going to stay above the 50-day moving average. But if price stays above the 50-day moving average, guys, we are pretty much done from there. That means that S&P 500 index is going to be our beautiful and nice index to continue. Similarly, when we look at the Nasdaq, you can see that the Nasdaq never went below the 200-week moving average on a weekly time frame. It just came, it touched above that, it touched and went above. It crossed well before any other index its 100-week moving average, and now it is above the 50-week moving average as well. Similarly, when we change the chart to daily time frame, you can see that the index is above the 200-day, it is above the 50-day, and it is now challenging its 100-day moving average, right? So this is a positive sign. But for the Dow Jones Index, that certainly isn't the case, as you can clearly see from here, right? Now, does that make does that make sense for you guys so far? Do you understand that? Okay. So in order for us to pick up a stock from any index, so someone is saying that just elaborate a little bit more. A lot of people have understood it, but just those of you who haven't. So in order for us to understand, if we wanted to take a stock, if we wanted to trade the stock to the upside, we have to make sure that the stock belongs to an index which is in the leading index, right? And then we need to know which index is really important, which index is really leading the way. Now, why it is important, let me explain a little bit more, and we continue with this with this one, right? So because after knowing the index, the second most important thing for us to focus then after that is the measuring sectors. So, just like how we have measured various different indices, the second thing that we got to do in order to trade stocks is that we need to know that which sectors are the leading sectors and which sectors are the lagging sectors. Again, we perform the same sort of a concept, the same sort of a methodology for different sectors. Now, how to perform those sector analysis? Again, let me jump back into the into MT4. All what you got to do is that you got to put the same analysis with respect to that, but do it on various different ETFs, right? And those ETFs are right over here, as you can see. This is your energy ETF, this is your emerging market ETFs, and all the other ETFs are there as well, right? So you just got to do the same sort of analysis. Now, again, the reason for this is that if we wanted to take a position, a long position in a stock, which we think is going to, which we where we hold a bullish stance, we need to understand that firstly that the sector is positive, because if the sector is not positive, if the sector is not leading, if the sector is lagging momentum, it is highly likely that we may not see that huge momentum in that particular stock. Now, for example, right now, tech sector is obviously your leading sector. And why? Because tech sector is primarily represented by the Nasdaq index. Now, if you look at Microsoft, if you look at Apple, if you look at Amazon, all of these stocks, when you look at them, you can see that they really come from the Nasdaq index. Of course, some of them are in the other indices, but it's primarily that tech sector, and the Nasdaq represent that tech sector, the core of that tech sector. So that is why we got to understand that. And then if we are thinking that, okay, we are going to take a short position, then we need to know that which is the weakest sector in the among various different sectors. Then obviously, if we're going to pick up BP, For example, like an energy stock, which is primarily down because oil prices are massively down. This is your energy sector. Energy sector is your down sector. So if you put a short position on here, you will see that the chances of that position working out are highly likely. Why? Because first of all, you have the sector momentum behind you because the entire sector is down. And then as you can see from European markets, the entire market is down today because of two major reasons. The two major reasons are, number one is that the sell-off that we are seeing in the energy sector, right? So the energy sector is putting all the indices, and which is primarily driven by crude and Brent, because they are back below that $20 level. I'm talking about crude oil specifically over here. And so, if you were thinking of putting a bullish intraday position, so today is probably not the day, because the entire market is being carried out by oil to the downside because of oil, the sell-off in the oil, and that sell-off is dominating the energy sector. So that is not the way to look at it from that particular one. But anyways, that is how you determine the different sectors and determine your indices. The third important thing with respect to special events is that, especially under the situation that we are really looking at, is your stocks which you can really trade under COVID-19. Now, obviously, we will have a look at some of these stocks and define those level of resistance and support with respect with respect to the support and resistances. But overall, the sector which has performed really, really well is your streaming sector, right? Because we can see that Netflix price is up year to date without a doubt, right? And Disney Plus has performed incredibly well. People are under a lockdown situation. They're sitting home and they're watching television. And of course, some of them are working as well. But a majority of the public is pretty much, sitting home and watching television. And this is the time for Netflix and Disney to maximize their gain. And then of course that is pretty much reflected in the stock price for Netflix, which is enormously up. Then the second sector, which is doing quite well, is your online retailers, because obviously you cannot go out because of COVID-19, because of coronavirus. So people have shifted their shopping habits or their essential shoppings to platforms like Amazon and eBay. And of course, this is why we are seeing this extensive rally for stocks like Amazon as well, right? And then, of course, within this space, you can say that, other stocks like Tesco, like Walmart, and other grocery stores which have some sort of online presence, and they are providing that online delivery at the same time as well, they have also performed quite well as well. Now, the one particular sector which has been under the direct influence of COVID-19 is your pharma sector, because remember, every particular pharmaceutical company is under the influence of coronavirus. They have seen the sales going up because of the massive disaster that we are really seeing for humanity. People are dying, and there is this rush to find medicines which can really help the coronavirus patient, and of course the vaccine as well. And because of this particular reason, we are seeing massive interest in pharma sector. So if you are looking for a bullish bet, the pharma sector certainly represents that opportunity. And of course, your streaming is still there, and then your online retailers like Amazon, eBay, Alibaba, all of them are doing pretty well there as well. Now, speaking of the sectors which are under pressure because of coronavirus, this is your tourism. So under your tourism sector, we are really talking about airlines and hotels like Hilton and Marriott. All of those hotels, the stock prices have been they've dropped massively. And the airline stocks like United Airlines, Ryanair, and EasyJet, all of these stocks have seen massive plunge. So if you are looking for a short, then that was your opportunity. But now taking a short position on any of these sectors, on any of these stocks, perhaps may not be that lucrative. Although we are in an earnings season, and because of the earnings season, the volatility is going to remain, and we don't really expect the growth to go to its normality anytime before January 2021. So with respect to earnings, I think a lot of companies have pretty much written off this entire year. They're expecting the quarters to be substantially down. We are already getting the earnings, from the financial banks, and the finance sector is right over here for you guys, the Bank of America, Citi, and Barclays, and so on and so forth. But anyways, so that is your sector play. With respect to how you really do that. Now we will continue, and then we will move into our technical analysis part. But before I do that, let me just quickly have a glance through some of that the questions over here. Yes, Daniel, the answer to your question is yes. So David has asked me that we should check the performance of the index. Yes, we should. It is always a good practice to do that. John is asking about ETFs. I suppose you should just get in touch with your account managers. And the COVID-19 oil is down because the price war in Saudi Arabia. Energy streaming is gaining strong because of that, but how banks relates to all of that. Right, okay, so Daniel has asked me a pretty good question. He's saying that how banks are related to all of this. First, banks are very much in the center of everything. Why? Because remember, all the new loans for the new businesses which are going to be given to these smaller to medium to big businesses, they are going to be going through these banks, right? So the banks are very much focused from three different perspectives. Number one is the lending and the investment side of that. Number two is their equity trading. Remember, during the volatile period of the 2-3 weeks of the COVID-19, how big volatility was. So that has certainly had a positive impact on their equity business. And thirdly is the fixed income space. Now, because of the COVID-19, we have seen this massive cohesive response from central banks, and the central banks have reduced the interest rate. Now, obviously, reducing interest rate is going to impact the bank's interest income, because remember, when you open up those saving deposit accounts, there's always an interest rate on that. Now those interest rates have gone down, so there's less portion left for banks to make money. But at the same time, fixed income trading has gone pretty well for the banks. So that's the answer for Daniel for your question. All right, so there are still a lot of questions there. Amazon is at its highest. Oil has been down. Why is energy up? Okay, so let me just continue, because we are coming to it, because of the questions are just way too big. I have answered some of them, but remember, next week on Wednesday on YouTube, I am taking a special session on questions on Q&A session, and you come and then join me over there. You can find the information on our social channels like YouTube and on our Twitter and everything. But that particular session is only geared for a Q&A. So I'd be more than happy to answer some of the questions there. Now, to have a quick look at the prices, let me just show you the crude oil, because there has been a few questions going on about crude oil. Now, folks, when it comes to crude oil, remember what we talked about was and we also did this in our videos as well, that first of all, whenever there is a bounce in any market, the first thing that you got to do is you got to draw this Fibonacci retracement ratio. I find them quite useful because if the price crosses above the 23% retracement, we are pretty sure that the bounce that we're seeing is not a dead cat bounce. Now, under crude oil prices, when the price came right in this green candle and it failed to go beyond that, and the red candle clearly was made a lower high as compared to that one, the answer was very clear that the current impact of the supply cut isn't really going to boost the prices. So we had that answer. Now, when I look at crude price, I'm more focused on the weekly time frame, and I'm more focused on the lows which are right over here back in 2001. This consolidation zone is really coming right from here, right at the bottom of this one. So I'm picking the bottom of this particular area, and then I'm wrapping up some of that consolidation zone, which means it runs from 1685 to 2034. Now, clearly the price is entering into that area. And as we enter into the area, keep an eye on the RSI. We have a lower low, right, on the RSI. When it comes to RSI, we have this low. Now, if this particular low remains above this low, then that would be a complete and clear signal for traders from the weekly time frame perspective that the price isn't really going to go any more lower from here, and the momentum is going to continue to the upside. But if the price breaks from here, then we will perform another technical analysis, and then we will give you more details in relation to that. If the price crosses above this, then where to go from here. But right now, for now, I think this area of support is very much we are concentrated with, or what we are focused in on. But in terms of resistance level, if you're really taking the trade on as the price is in this support zone, and then you really should be looking at your minimum target at these resistance levels right on top of these particular candles. Nothing less, nothing more for the time being. And I think that should be that should remain your focus when it comes to oil price, right? Now, to quickly go through some of the stocks, because we are running to the end of this webinar. So this is your Tesla stock, where for the disclaimer purposes, I hold my bullish position, my long position in that. For me, really, the momentum that I am really looking for is right at the top of this particular candle, the all-time high, and this is my resistance zone. And in terms of support, let's just say that if you haven't entered into the price, then you should be really looking at is this area where the 100-day moving average is on a daily time frame. And if you really wanted to risk even more with respect to that, then you could be looking at this area just over here. But remember, this is a very, very risky trade, because the risk on this one, it's likely that the price may not stop here, but given the fact that the 50-day moving average is over here, so the chances are that the price may actually bounce. But make sure your stop losses are tight if you do consider to take this trade. But overall, I think the momentum is very positive. The price only came close to its 50-week moving average, and it bounced from there. Now, with respect to Netflix, obviously this stock is very, very, very strong. It has come into this area of resistance, and it is likely that with the lockdown coming to an end, that we may see some sort of a resistance piling into the stock. But if the resistance doesn't come over here, then the next level of resistance that I'm really looking at with respect to that is right on top of these particular candles. As always, don't worry about it, because the video will be posted afterwards, so you can have a more clear look of these levels afterwards. But remember, the earning season is around the corner as well. So if the stock does drop, then you wanted to maybe consider this support zone. Otherwise, this resistance zone is good. If not, then the following one is going to be this one. apologies for not changing the colors, because I think with the time coming to an end, I'm just literally putting those ones for the time being. Now, with respect to Boeing, folks, this is a very, very good stock. I love this stock. I hold a position in this stock as well, long position. That is what I hold. With respect to buying this particular one, first of all, why don't we just quickly put the moving averages on that? So just that, so that we know that where it is trading, right? Because the best way to find that is by through looking at the moving averages. So let's put 50-week on a weekly time frame. So obviously the price is trading below that, no doubt there, right? And then let's put another moving average, which is going to be our 100-week, right? There you go. And change the color to orange, which is right over here. Obviously the price is trading below that as well, and we know that, no surprise there. Now let's put the 200-week moving average. Clearly the price will be below that as well. There's going to be no surprise, but just for the sake of putting it, we are going to put it right over here. Right now, clearly the price is trading below all of these ones. Now, if you wanted to do that Fibonacci retracement philosophy again, what you got to do is click on the Fibonacci over here and then see if the current bounce is anything to do with it, if the current bounce is going to see any impact, right? So let me just delete. Come on. Okay, and this is not going to be deleted now, is it, that easily? Because when it comes to it, deleting, it's very messy. Okay, there we go. All right, so if we draw that same concept and then we look at the fall from the high of this particular candle and go all the way to here, you can clearly see that the price actually went above that 23% retracement level, and then it touched before that 38% as well. So it is highly likely that the move that we are seeing with respect to Boeing is not a dead cat bounce, and then perhaps it will see some retracement, but it is highly likely for the prices to move higher. So what does that mean in terms of support and resistance levels? In terms of support and resistance levels, what you could do is possibly look for this area of support, which is right over here. Let's wrap the other line to the top of this particular candle, see for the price to come over here. If not, then wait for the price to touch or come again to its ultra low, the COVID-19 low that it formed. And if it comes over here, that would be your next level of support or your entry area. And with respect to resistance, I will not look for anything less unless the price goes all the way to 240 or at least the double of that, because the momentum of the room is quite big. Yes, there are certainly possible that if the price does come over here, we may see some sort of a retracement from 185 to 175 or so. There is this resistance area which can perhaps exert some sort of a selling pressure, but overall things do look great when it comes to Boeing. Right. So, folks, this brings end to our webinar, and I appreciate that you guys been with us throughout this, and for you guys to taking the time out to listen to this this webinar and join us. So I'll be here next week again, the same time, when we will be doing analysis on indices and then how to trade indices. So until then, I wish you guys good luck, and hopefully this really helps you guys. Thank you.